All right, so let's dive into some ETF news today. And BlackRock is front and center. This is going to be a big one that'll hopefully give you guys an idea of whether or not we're going to get the ETF for Bitcoin passed. All of this is going to be an interesting one. Stick around. My name is Paul Barron. Welcome back into Tech Path. All right, a couple of things before we get started. I want to thank our sponsor, and that is iTrust Capital. Long-term holding of Bitcoin or other assets in crypto, you can do that in an IRA. And of course, iTrust is one of the places to check it out. All you have to do is visit their website. Go over there. They have tons of options that you guys can get into. Also get into your own tax advantages. Obviously, everybody's doing that nowadays. So check that out with your own CPA or financial advisor and go that direction. Make sure and use our link because it's going to give you a $100 funding reward if you decide to go that direction. So let's get into a few things today. And one of the main news items is that BlackRock, who has been in a bit of a jousting match with the SEC, has finally kind of bent the knee. And right here from this tweet, looks like BlackRock has caved to the SEC's demand to exclude in-kind creations and redemptions from their spot ETF filing, and they've just filed their amendments. So this simply means the model they were trying to use for redemption was not something the SEC was fond of. A lot of the other filings had already adjusted for this. BlackRock was one of the remaining filers that had not. So that was a big news. I think that can tell us a couple of things. One, it's going to give us an idea that the SEC could look at this and say, hey, this is a win because we forced everybody to do it this way, our way. And BlackRock could look at it and say, hey, listen, these are the things that we have to do to make these products work. It's a win for us as well. So I think it's a kind of a safe face. If you look at Watcher Guru, just in, ARC21 now has been listed on the DTCC under ARC-B. That's another sign that we're going to continue to see a lot of these filings start to really accelerate. Remember, we only have about 10 more days before this could become reality. Other tweets out there right now, James Seyffert, update, Hashdex had a meeting with SEC on December 14th regarding the filing, and not sure why it wasn't added to the site still yesterday, but both the division and the corporate finance and division of trading markets were there. So that means that's coming on as well, Hashdex. All these line of ETFs, and as you guys know, we did a video on this yesterday, and that is that the marketing wars have begun. And if you guys remember the Dos Equis, kind of the most interesting man in the world, that ad actually is now playing on our channel, but it's a worldwide movement now. We're going to start seeing this kind of advertising integrated across all these products. The fact that they've already gone out with this, with Bitwise, is a bit surprising, but at the same time, is very, very bullish because it does show that they're spending money to do this. It's not just a propped up ad over on Twitter. This is something that's real. Another thing that's happening, Grayscale CEO says basically a spot Bitcoin ETF approval would unlock around 30 trillion. This is a little bit outlandish. 30 trillion, yes, there's a lot of money on the sidelines right now that have not necessarily locked in on what those assets might be when we see a spot approved. The question would be is how much percentage of portfolios would truly be, allocated to Bitcoin? And in many cases, many of the advisors I talk to are talking anywhere between 1% and 5%. Now, 1 and 5 is a lot. Don't get me wrong. That's a massive amount. It would have a major impact on Bitcoin's price, but it is still a small percentage of overall portfolios. So just keep that in mind. Just as a reminder, Coinbase is the custodian for all of these guys, including BlackRock, Grayscale, ARK, etc. And you can kind of, get the crux of this tweet right here, and that is that they've aligned themselves with pretty much the biggest players out there in the financial markets, most of whom are much more powerful than Gensler and the SEC. And I would say, when you look at Grayscale, BlackRock, I wouldn't necessarily say Grayscale, but definitely BlackRock, ARK, maybe Valkyrie and Franklin Templeton for sure. All those are major Wall Street icons. And of course, we all understand what that means when it comes to regulatory alignment. Most of these guys understand how to play the game. So it's a good one. Now, another one that understands how to play the game, of course, is Senator Warren. And she is not stopping. Senator Warren now sharpens tone against the industry with new letters about this whole issue around government hires. And a couple of points I want to focus on this. This was a letter to Coin Center Crypto Advocacy Group. So basically, she accused the industry groups of flexing a not-so-secret weapon, former defense and law enforcement officials being hired in basically an attempt to undermine congressional efforts So there's some tactics being played here. And remember, she's camping on this whole concept that crypto is making its way into financing, the bad guys. That's not the case. We already know that's already been proven. And in many of the hearings that we've shown, if you have not checked out our Senator Warren hearings, go back and watch those. She basically ignores the facts and just tries to get her message across. But the other thing that she hits on, which is interesting, is that the abuse of a revolving door is appealing. This is her revealing that the crypto industry is spending millions to give itself a veneer of legitimacy. Listen, a veneer of legitimacy is being done by the biggest Wall Street players on the planet. So I don't think that an association or even the companies within the industry could hold a candle to what's happening in Wall Street. So I think she's completely out of it. I just don't understand why the connection isn't there. Obviously, big banks, that's why the connection isn't there. Here was another one. This, of course, was the executive director over at Coin Center, Jerry Brito. Pushback says, hey, calling it's a bullying publicity stunt. This is typical of what we've seen here. Rather, it's an exercise of fundamental right to freely associate and petition the government. It's everyone's right. This is politics at its best. The politicians play this better than anybody. And if you understand associations and how they work in DC, they are pretty much the guiding light for a lot of the lobbyists. And I've worked in these associations throughout my career. I've seen how they work. These are traditional tactics. Yes, of course, you hire people from the other side. You try to get understanding in what's happening on the other side. So you want the best that you can get. So it's not something that is not expected. Of course, but Paul Graywall came in and kind of touched on this. This was in response to Eleanor Terrett's tweet. Let me zoom up on that for you guys. Basically, what she's saying is that Warren's office has already kind of done this with the banking industry. So for others to do this with law enforcement, legal, and understanding the judicial aspect of this is not surprising. And Graywall kind of just says, hey, this is, smearing the integrity of people who served our country in uniform and otherwise. This is basically saying, don't pick on us because we're hiring good talent. And in a way, this might be bad because Warren is going, OS, we've got somebody over there that's really could come at us with a consistent message and has a lot of credibility. That is a problem for Congress in many cases, for sure. Now, how's Coinbase stock holding up to all this? Because this, of course, I think is going to be the key. And if you guys didn't hear the news, Revolut had some issues in the UK, which has caused, I think, the zoom up we've seen on a pretty simple move on Coinbase, the stock overall. This is on the 4-hour. We're using the LuxAlgo chart, so that's one way. If you guys have not checked out the LuxAlgo tools, we always have a link down below to check those out as well. There's some cool things we're using with that tool set as well that kind of maps up to what we're doing on our market sentiment index. Another thing I want to hit on is the central bank scenario. And central banks face the challenge of adaptation. And this is something that I think all banks, really, if you think about it, are going to face in a short period of time. Challenges isn't about altering interest rates or implementing unconventional monetary policies. It's a test of adaptability and responsiveness to this whole new economic landscape. And I think this gets into the monetary, model that our planet lives on. And central banks, I think, are the ones that could end up actually winning on this when we really see the use of blockchain, stablecoins, et cetera, they kind of move in this direction. The recent coverage on the Fed, European Central Bank, Bank of England, and obviously the Bank of Japan highlights is kind of showing this. So it's a big deal, I think, going forward here. In response to a positive signal from inflation data, if you saw our FOMC meeting video that we did last week, it was basically Powell pivoting, not actually pivoting, but pivoting his thought to say, okay, we think we've got enough pressure now. Jobs are really painful and inflation is slowing. So we think there is going to be a pivot in terms of a Fed rate cut. So all of that, but the markets is like, hey, we're fine with it because we've interpreted this as a sign as a more aggressive rate cuts for 2024. And everybody's kind of pointed to that. So I would agree that this all plays into a very unique position, I think, with what's happening with the central banks. So now more than ever, they're required not to be just stewards of money stability, but also agile and responsive, which they've not done and or been before. So the ability to do so will be significant in terms of their impact on the trajectory of global economic recovery and stability. I don't know if these banks can move this fast, but when charged with either move or die kind of scenarios, and I think this is going to happen in traditional banking as well, I think they will move with where the market is going. Now, I want to play a clip for you guys. This gets into a little bit more of what Raoul Pal has talked about in terms of the things that could affect not only the sector, but how banks might respond as well in the future. Listen in.
And it's so obvious what 2024 and 2025 are, and that's more stimulus. They're going to be cutting rates. If they screw it up and inflation does go up, they will use yield curve control, which is printing of money, to maintain interest rates, which Japan has been doing. But generally speaking, it's a year of stimulus. In a year of stimulus, as investors, we need to say, okay, what's going to create the biggest opportunity set? The multiplier on all of this is crypto. It always outperforms all other assets, particularly in these moments. And crypto, again, is such a beautiful thing. This won't last forever, but it's a gift for us because you get 3 years where it's the best performing asset on earth. That's through macro crypto spring, summer, fall. Crypto macro winter, when the downside of the debt refi cycle comes, it's the worst performing asset price on earth. And we just keep repeating. The lows are higher. It's just an exponential, logarithmic trend that keeps going because of adoption.
All right, he hits on a few things there, and I would agree to a certain extent, because the one thing that the Fed is concerned about is lifting off the gas pedal too early. If they pull off the pressure too early and we do get a regression of inflation, it could get into scenarios like what he mentioned, which is what's happening in Japan. Here's a quick article on, Japan's central bank, which is keeping its negative interest rates unchanged. And again, they're watching wage trends also aligned with what's happening here in the US because our jobs are actually starting to slow. So this gets back into the Fed. Now, what does this mean for crypto? And you guys are thinking, what's the strategy? Because remember, everything comes off of the greater economy. And if the greater economy starts to see basically an opening that says, all right, I can go back to hiring people because credit's going to ease up, meaning I'm going to get lower interest rates. Housing will ease up because we've already seen another matter of fact, I think it's the largest drop in housing interest because it went from 8 down to 7. So that's a major shift as well. So that could help the housing market. But the lagging indicators that we've had around jobs is the problem. Now I want to go into another one. This is kind of hitting on the Kobe EC, which kind of supports this. So headlines, on ChairPal, 12 days apart. Fed's warning from leaving the possibility of rate hikes on the table to discussing rate cuts. Over this 12-day period, we saw new data indicating core CPI fell slightly to 4. And then the labor market conditions came tighter. So that's the thing that Powell is concerned about. If they continue to push on this is it's like a needle. It's a real tight one because if they continue to push, this could get to a point of no return where you get a very significant uptick in joblessness, meaning unemployment in the sense that we could go to double digit. Do we go back to a 2008 cycle? Maybe not. That's the question of where the Fed can kind of manage this so-called soft landing. So all of this is kind of lining up, I think, to a very interesting position, and that is how do you invest? What's the strategies that you use? I've got a clip here that shows the portfolio strategies of both Tim Draper and Raoul Pal, both different ways, and I'll kind of comment on each, but listen in.
I don't really do, and I've tried it in the past to try and own a broader diversified base of tokens. I just end up with shrapnel in my wallet that I don't care about. I like to really focus on what I'm doing. So my big focus for this cycle is Solana, and that's been for the last year. Obviously, I have a lot of ETH. I still have some Bitcoin, and then I have a few other tokens here and there. But really, it's a very concentrated bet on what I think is going to be the breakthrough for this cycle.
In my business, I invest in a very diversified portfolio of seed investments, of very early investments, and some of those trees grow and some don't. And the winners become very big, and the losers, or the other ones, they sort of fade away in our minds. And so I end up with a very concentrated portfolio.
So what you have there is really two different philosophies. One from a VC, Tim Draper, who does look at the spray and pay model, which is usually early seed investment, which is tough to get into from an average person. Then Raoul Pal, who's looking at, a particular, strategy that's based on either a technology or something from a fundamental standpoint, which he's done with Solana. So mine is kind of the same way, but I'm more in the middle. I look at it from a standpoint that there's a lot of technology out there right now that is much more mature than, say, a seed round, which is difficult to get into. But I still do invest in seed round businesses as well, which I think, in this next 2 years, probably my biggest win that I'll have will be with a seed round investment business, not in crypto. So there are still alternatives out there around all these strategies. So you have to play that in to your portfolio, not financial advice. But the point is that you can go crypto's route, whether it's real estate, we're starting to see a lift off that. The point is all of this headwinds that we've been facing over the last really 2 years is starting to let up. So we're at a critical point because we could get a sale underneath us and go forward, or we could go into some still water if inflation reverses. That's the one we're watching very closely. So we'll break it all down for you guys to give you guys an insight of where this is going. I want to get into the last clip here, and this gets into Tim Draper's Bitcoin prediction, which I think is interesting. Listen in.
But I'll say 250,000. I'll say it hits 250,000. It'll be a range, though. I think, though, you will see 250,000. I actually think that if it hits 250,000, that it'll go way past it.
All right, there you go. 250, and it'll fly right past it. So I don't know. I'm looking at Bitcoin currently right now at 42 and some change after a little bit of a drop this morning. But what are your guys' thoughts? Let me know in the comments down below. If you guys are watching right now, to jump into the Diamond Circle, it's very simple to join. Just click the link down below. If you guys want to catch me on X, it's very simple there. It's @Paul Barron. Catch you next time right here on TechBat.